Thank you very much for joining us. In this lecture, we'll discuss different types of supplies between the landlords and tenants, and we'll see the implications of VAT on different types of supplies. Usually, there are 12 different types of supplies in between the landlord and the tenant. These are inducement, deposits and advances, rent-free period, rental payments, reverse surrender, surrender of rights, variations, landlord contribution towards tenant cost, rent adjustment, dilapidation payments, messy profits and other charges like repair, cleaning and telephone expenses. We'll try to understand these different type of supplies and their VAT implications. We are starting with inducement, which is called reverse premiums as well. Inducement means amount paid to enter into the lease agreement. There are possibility that these inducements are being paid by the landlord to the tenant, or there is a possibility also that the landlord or the tenant, these are paying these inducement to any third party to enter into the lease agreement. Law says that if the payment is being made by the landlord to the tenant, it will be considered supply by the tenant. If the tenant is a VAT registered person, then tenant will charge 5% tax. If the tenant is not a VAT registered person, it will be considered out of the scope. It will not be subject to VAT. In the same way, if the landlord and tenant, these are paying any amount in the form of inducement to any third party, then this inducement will be considered a supply by the third party, and this inducement will be subject to VAT if the third party is a VAT registered party. If the party is not a VAT registered party, then this inducement will be considered out of the scope and it will not be subject to VAT. Advances and deposits. We know this, that deposits will not be adjusted against the rent, while advances will be adjusted against the rent. If the tenant is paying any deposits to the landlord, it will be considered out of the scope. And if tenant is paying any advances to the landlord, these advances will be adjusted against the future rentals and it will be considered supply. Landlord will be liable to issue tax invoice within 14 days from the date of the receipt of the advances, and the taxability depends upon the nature of supply. Third one is the rent-free periods. Sometimes it happens that landlord gives the property to the tenant for some specific period and tenant is not liable to pay anything against this free supply of property. So if the landlord is not getting any consideration from the tenant, then it will be considered out of the scope supply. And if the tenant is liable to do anything against this supply, then it will be considered consideration and it will be subject to tax based upon the nature of the supply of the property. Sometimes it happens as well, there's some sort of advertisement like they are saying 12 months rent is 50,000 and first 2 months are free. Law says this is just a marketing tactic and the whole amount will be subject to tax. This is the fourth supply, which are rental payments. We know this depends upon the location of the property. If the property is within the designated zone, any supply of the property within the designated zone is out of the scope. If the property is being supplied on the mainland, it depends, this is a commercial real estate. If this is a commercial real estate, it will be subject to standard rate tax. If this is a residential real estate, then first supply of the residential real estate on the mainland, it will be zero rated and second supply will be exempt. If this is a charitable building which is being supplied on the mainland, then first supply will be zero rated, then all subsequent supply will be standard rated. Number 5th is the supply where the landlord makes contribution towards tenant cost. Whatever the contribution is being made by the landlord towards the tenant cost, it depends landlord is getting anything from the tenant against this cost or not. If the landlord is not getting anything against this contribution, then it will be considered out of the scope supply, because there no consideration, it will not be considered supply. And vice versa, if the landlord is getting any consideration in any form, then it will be considered supply by the landlord, and this supply will be subject to tax based upon the nature of the supply. And nature of the supply we have already discussed here. It can be zero rated, exempt, or out of the scope, depending upon the location of the property as well as nature of the property. And sixth types of supply is variations of leases. Once the lease agreement has been signed, there might be some sort of variation, and it can be in the form of use, period, or premises size as well. So simple rule is there: if there is no consideration, it will not be considered supply, it will not be subject to tax. If there is a consideration, it will be considered supply, it will be subject to standard rate of tax. Seventh type of supply is surrender of lease. When the tenant takes the property on lease from the landlord, means tenant has a right to use that property. If the tenant is giving this right back to the landlord, this is called surrendering of the rights. It all depends again on the consideration. If the landlord is paying any consideration, supply will be subject to tax. If the landlord is not paying any consideration, supply will not be subject to tax. And it doesn't matter whether the property is a commercial property or it is a residential property. Eighth type of supply is reverse surrender of lease. Sometimes tenants surrender the rights in the property. Along with this, tenants make some sort of payment to the landlord as well. So sometimes there is a clause in the contract where the contract says that if the tenant is breaking the contract, if the tenant is breaking the rental contract, tenant will be liable to pay 2 months rent. So this is called reverse surrender of lease. In case of reverse surrender of lease, landlord is not paying anything to the tenant for surrendering of such lease, so it will not be considered supply, it will not be subject to tax. UAE law is silent about this, but I believe it will not be subject to tax because consideration is not there. Ninth type of supply is the rent adjustment when the buildings are sold or leases are assigned. Means the adjustment of the rent, and against this adjustment, supply is not there. When supply is not there, rent are being adjusted, it will be considered out of the scope transaction. 10th type of supply is called dilapidation payments. As I mentioned in the definition, the dilapidation payment is the amount that the landlord will recover it from the tenant for restoring the property in its original condition. It will be at the end of lease term or very near to the end of lease term. Such dilapidation payment represent a claim for the damages by the landlord against the rent. Law says the payment is not consideration. Once this is not consideration, it will not be considered supply, it will be out of the scope. Unless the amount is for any work that was required to be finished by the landlord, then it will be subject to standard rate of tax. 11th is rent mason profits. Rent masonry, these are the damages for the profit of landlord by reason of wrongful occupation of the property by the tenant. Tenant is wrongfully occupying the property, and for these there is the damages of profit for the landlord. UAE law is silent about the masonry profit, but it has been given in the UK law, and I believe this statement is correct, that up to the rental amount it will be considered supply, it will be subject to tax. Any amount that is being received by the landlord from the tenant beyond the rental amount there will not be any supply against those amounts, so it will be considered out of the scope and it will not be subject to tax. And the 12th type are the other payments. These payments can be in the form of telephone bills, electricity, insurance. Law says it all depends upon the contractual arrangement, and its taxability will also depends upon the contractual arrangement. So let's take this. As per the contractual arrangement, landlord was liable to pay telephone bills, electricity or insurance. There is a possibility that as per the contractual arrangement, tenant was liable to pay telephone bills, electricity, insurance. If the landlord was liable to pay all these expenses, there is a possibility that landlord is getting the tax invoice in its own name. So tax invoice in the name of landlord or tax invoice in the name of tenant. If landlord is liable to pay and tax invoice is in the name of the landlord, landlord will claim it based upon the nature of the supply of the property. If the property will be standard rated, landlord will be able to claim. It will be out of the scope, landlord will be able to claim. If the property is exempt, landlord will not be able to claim any such input tax against any such expenses. On the other hand, if the tenant is getting the tax invoice in its own name, but landlord is liable to pay and landlord is liable to bear such expenses, then the concept of reimbursement will be applicable. In the same way, if the tenant is liable to bear the expenses and tenant is getting the tax invoice in its own name, then tenant will claim input tax based upon the nature of the supply of the property. On the other hand, if the landlord getting the tax invoice in its own name, but this tax invoice is for the expenses for which tenant is responsible, then again the concept of reimbursement will be applicable. Hopefully it will be fine for you. Thank you very much for joining us.